But where the big game is to be played is China.
I think it was a big mistake, this Chinese escalation, because they're playing with a pair of twos.
No other president's taken it on. I had to take it on the last time.
This is exactly what happened last time when Trump was in power in 2017.
The Bitcoin price is crashing, down as much as 30% from all-time highs since the Donald Trump tariff trade war has begun. And breaking news today, it's being escalated. The White House says 104% China tariffs take effect at midnight if China refuses to back down, if China refuses to come to the negotiating table.
Look, I just spoke to the president about this, and he believes that China wants to make a deal with the United States. He believes China has to make a deal with the United States. It was a mistake for China to retaliate.
And for perspective, it was only about a week ago that the United States announced one of the highest taxes on trade, a 34% tariff for the country of China. This crashed the Bitcoin price immediately, down another 15%. China then retaliated, and now the US is again retaliating. 104% China tariffs are about to go into effect. But most people don't understand what's actually happening here. I do. Watch today's whole video, because some of this back and forth is really just for show.
The agreement with China will be, you will agree to tariff terms. We will battle it out in public and make us look like we're all strongmen. You will agree terms because you have a dollar debt problem.
And even the most vocal pro-tariff individuals, like Anthony Pompliano, if you watched our interview with Pomp the other day, you know he is very pro-tariff. Even he is stating that this is escalating a little too fast. China hit with 104% tariff today. Hopefully cooler heads prevail and tariff rates go back towards 5 to 10% in the steady state. So what's really going on? What's the actual, real master plan here? Because yes, Bitcoin is crashing, we see this, meaning this is sort of collateral damage. What most people aren't looking at is the strength of the dollar. The strength of the US dollar compared to other major basket of fiat currencies, government currencies on earth, is crashing hard. People are speculating that this could be Trump's master plan.
He wants to crash the dollar.
What? He wants to crash the dollar.
He wants to crash the dollar. America has historically been in the difficult position that because it is the currency of choice, people buy dollars and they store dollars. So people sell stuff to America rather than buying stuff from America so they can get dollars into their own country. He wants to reduce the power of the dollar so that people stop doing that. And so because the dollar is weaker, people buy more stuff from America because it's cheaper.
So the lower this goes, the more potential buyers step up from other countries to buy products in America.
But these are the reasons why, to actually answer the question, I don't believe he will reverse. He's expecting the revenue. This is what he thinks is going to happen and wants to happen. And the long-term goal is that in 2-4 years' time, factories are opening and people are saying, well, that wasn't so bad after.
And just understand, we saw a very similar playbook to a lesser extent. The last time Donald Trump was in office, he immediately crashed the dollar back then for tactical reasons, for negotiating power in a sense.
The last time.
And this time, it is so much bigger. An incredible update from global macro investor Raoul Pal. This just happened. Let me share this with you. But very quickly, major announcement. Let's take 60 seconds for exchange partner Bitget. Introducing Bitget Onchain, a revolutionary new product where you can trade on-chain without leaving the exchange. We are excited to introduce Bitget Onchain, an innovative new product from Bitget that bridges the gap between centralized exchanges and decentralized exchanges. There is a link down below to follow along with me, only for the Altcoin Daily Army. Check it out, because essentially this allows you to trade on-chain assets with USDT or USDC in your spot account. And why this is so cool to me is because by streamlining the trading process, Bitget Onchain significantly reduces the cost and complexity of on-chain transactions, making decentralized trading easier, faster, and more accessible than ever before for Bitget users. Highly recommend being one of the first 1,000 signups, link down below. And listen to this 2-minute clip of Raoul Pal explaining, and the full video is linked down below, explaining why China is going to be forced to start printing money quantitative easing, why they'll be forced to negotiate with the United States. We saw a very similar playbook from Trump and China back in 2017, and why it's only a matter of time before Bitcoin benefits.
China's balance sheet lags China bond yields. So if you remember, the US said, well, we won't ever get to QE until our bond yields get close to zero. Well, that's happening in China right now. They're in a full debt deflation. And China's going to be very important to this story. And it's the most important headline that is going to come is what the agreement is with China. So the agreement with China will be, and I've been talking about this for a year in Global Macro Investor and Real Vision Pro Macro, the agreement with China will be, you will agree to tariff terms. We will battle it out in public and make us look like we're all strong men. You will agree terms because you have a dollar debt problem. The Chinese have a dollar debt problem and they need to service those debts. The problem is the RMB is too weak and the dollar is too strong. They don't have the cash flows in a slow economic environment to pay for it. They know, the US knows, Yellen even went to talk to them about it when she was still at the Treasury. They need a weaker dollar. Now, the mechanism by which China gets access to those dollars is usually via the euro-dollar market, and it's Japan that is the big driver of the euro-dollar market. So when we look at the weakening of the dollar, I like to focus on dollar-yen to think of how this plays out. The yen is one of the world's big exporting economies, and it has a very weak currency. The yen needs to strengthen, and a strengthening yen and a weakening dollar will allow capital to flow into China and other dollar borrowers via the euro-dollar market. And the key thing that happens here is this chart of the Chinese currency against the yen. The Chinese currency was too strong versus the yen, and that has been putting pressure on Chinese exporters and the Chinese economy. It needs to rebalance lower, and this head and shoulders top and this head and shoulders top tell us the US, Scott Bessent, is going to get what he wants.
So now it's more clear why Treasury Secretary Scott Bessent clearly states China.
I think it was a big mistake, this Chinese escalation, because they're playing with a pair of twos.
Scott Bessent is going to get what he wants, which is a weaker dollar. A weaker dollar will stimulate global demand. It stimulates and allows for the rolling of global US dollar debts. It allows for exports and imports to free up. It allows for the movement of trade, even with tariffs. It's a very big deal, the dollar weakening. And if China can have a weakening yuan, a strengthening yuan, a weakening yuan against the yen, what it allows them to do is to compete. And that rebalances global trade and gets the global growth cycle going.
And if you're saying, Austin, why would China fall for this again? If we saw a similar playbook back in 2017 with Trump, why hasn't China learned? Well, what allows the United States to do this still is the United States dollar is still the dominant reserve currency, fiat currency. That's the edge.
This is exactly what happened last time when Trump was in power in 2017. What we had was called the Shanghai Accord. It was a kind of public, not public agreement to weaken the dollar to allow the Chinese to stimulate, because they need a weaker dollar to stimulate because they don't want to weaken their currency via the currency band, because if not, you get a devaluation, which they do not want. So that was the Shanghai Accord then. The dollar fell dramatically and the Chinese stimulated massively. If you remember 2017, the Fed were raising rates. They were shrinking the balance sheet, but China and Europe stimulated. And that was via this mechanism.
When in doubt, zoom out. And looking at Bitcoin, going all the way back to 2017, the Federal Reserve was literally raising rates, yet Bitcoin still went crazy. That's because China was printing. Click subscribe for an edge investing in crypto. And by the way, my brother and I will be speaking at Bitcoin Conference 2025 in Vegas. Ticket prices are about to increase, so use code ALTCOINDAILY for 10% off. Ticket prices increase this week. Link down below.